Morning, guys. It's the 31st of March, last day, trading day of the month. We are Signal Centre Talking Ball. Joe Neighbour, Ian Coleman, Steve O'Hare. Morning, gents.
Good morning.
All good?
All good in the hood.
Excellent. Anybody got anything to say? Anyone seen anything that's
No.
worthy of note?
More stimulus overnight. China's pumped in 50 billion renminbi, which is just over 7 billion. Was it billion or trillion? Go fucking
Trillion,
lose.
surely.
I think that just shows you it doesn't really matter what they're doing.
Where's my little piece of paper?
I think even the analysts that know what trillion billion means
it's a billion.
are scratching their heads.
It's only a billion overnight.
Oh, only a billion. I no wonder it's sold off.
But then they've said that the Australian government have putting into a wage subsidiary of $130 billion just to prop up wages. That's why the ASX was up 7% at one point.
Right.
Let's filter through today to equities, isn't it?
So it was up at one point and then down, man.
Down.
I don't mind running through my stuff first.
Okay, well, yesterday we just sort of recap on what we did yesterday. So we had
Joe
3 trades, as always. No, actually, I didn't. just trying to keep it fair and balanced. We had transparent. Yeah, we had trades at a dollar yen trade, which lost 0.55R. 1R loss on the FTSE, 1R loss on Euro Sterling. So overall, a little bit of a dip down in the old P&L, but we're still hovering around the highs, which is good.
Double top.
Double top. Only if it breaks through there, then we can call it double top.
Okay. Right, we're going to take it seriously now.
Okay.
Seriously.
Then we come back in June, don't we? If it goes through there.
Yeah. We can just continue the bullish channel. Come on, boys.
That's the plan. Right, go on, Steve. Lead the way.
No pressure now. Let me just share this. Right, I'll just run through. I might do. Yeah, I'm going to do S&P today, so I'll just quickly run through commodities. Oil has had a little pickup.
Cool. It's not a lot though, is
overnight.
It?
Not a lot. No. We're still sort of. If you look at the shorter term time frame, is probably still in descending triangles all over the shop. So some sort of decent levels to look at today. I'm looking at seller rally here. Taking this trend line. This is obviously an overnight gap or an over the weekend gap.
The measured move will take that down to about $10, wouldn't it?
Well, yeah.
Can't get down
why
there,
not?
Surely.
It's sort of like $10. You know, who's counting amongst friends? Obviously, the value. The group that are doing quite well out of oil at the moment are the oil storage companies. So because it sounds like the oil storage is at its maximum, so they're building as quick as they can, building places to hold oil. So it's overflowing the storage facilities. So that's something to look at. Copper, again, I think we've got this ascending triangle that looks a bit dangerous to me. This is a bearish formation, should continue the move down. We're getting a little bit of China back to work, so there'll be a little bit of demand for copper. I think.
Did you see the PMI number overnight?
I did read about it. Can't remember.
Okay, so it recovered.
It was a decent number, wasn't it?
52.9 from 35.7, and the consensus was 44.8. So
okay, so better than expected.
Straight back into expansion territory. But there was quite a lot of skepticism over the data, apparently. I mean, that's a massive number.
That throws the old conspiracy theory thing right into the light, doesn't it?
I said that just for you, because I know you'd run with that one.
That's going to be my subject of my conversation now.
Yeah, so again, this I expect this to play out where it'll carry on down again. So a little bit of a respite on the copper. I'm really keeping my BDI and gold, and I'll tell you what's that VIX index? What's the code for it?
VIX. Just VIX.
There you go. Lucky you're here, Joe. Because I saw maybe it's on a daily chart. Let me see a daily chart. It doesn't look as clear on this. I did see one daily chart here, which I've not been funny, but it did have a it was a lot clearer than this, a lot more accurate than this. I don't know where this data point has come from. That you know, getting back to 36. I don't know if that happened or not, but a bearish flag. So that sort of tells me maybe the volatility may continue to die down. Now, if the volatility continues to die down, then I really fancy gold as a higher. And again, we've sort of got this bullish flag in gold, and also we've got it in silver as well. So for me, watch the volatility index, and maybe the safe haven may move from dollar to gold.
Motherfucker.
So anyway, let me go to what I'm
Really?
going to trade. That's see where the fibs are on here. 38%.
Fucking
Nasdaq. Nasdaq could be an interesting one, actually. That might be just above the 38%, is it?
Is
Yeah,
that a daily chart you got there? I mean, you can see the volume there, can't you?
Yeah, volume here.
Look
Yesterday.
at the state of that. Is that the day before? Or is that today, that latest one?
This one here. That's
Yeah,
today.
it's today.
That's today. Yeah, it's
Yeah.
got a little while to go there.
I was going to say, if that was the volume for yesterday, that was atrocious.
Yeah, but so be a little bit careful with this rally. We're seeing the sort of like move higher. A solid day yesterday, but the volume wasn't great. And have a look at the days. We get another move higher. That is divergence. So that's a sign that maybe it's not as solid a rally as we hope for. I'll be looking at the 50% retracement on Nasdaq, but the S&P is the one I really want to look at today. This downward trending resistance line, and we'll look at take that point 38% retracement. So despite the fact it's just breaching this downward trending resistance, I'm going to go short of this. I fancy this more as a medium term play, but I'll do it on the day anyway. Oh, can't we see what I'm doing here?
Fucking spread on that. 7 ticks.
26.39.
54.
7
ticks.
I'd like to give it a little bit of room.
47.
26.89 and give it 24.39. There we go. As you like those apples. I'm trying to give it a little bit of room on the upside, so I'm getting short at 26.39. Stop at 26.89. Target 24.39. I think that could play out over a couple of days, but I'll have a go today anyway.
Right, cool.
So good luck.
All right. Well, on the flip side of that, just to show that we don't all conform to the same thing, we have our own views. I've been looking at the equity indices and thinking that there was going to be a bit more of a rally, and still think there is potential for more upside in a few of them. This is the DAX. This is the 4-hour chart. Highlighted this inverse head and shoulders last week, which has obviously we've seen the breakout and a bit of consolidation. Potential that we've got some sort of breakout here of a consolidation pattern, wedge, ball flag,
Pennant,
something along those lines, pennant, triangle. Obviously, we haven't closed above this yet. We won't confirm that until 10 o'clock, but it's looking pretty good at the minute. And
yeah,
obviously
nice.
We've got to overcome this 10.125 level, at which point, if we do, I think there's scope for a continuation of this move high that we've seen here. Let's just see how that would work out from a measured move perspective, assuming that was the break there. They all sort of start to line up around here, sort of between 11,600, 11,800, which is a 61.8% retracement of this entire down move. Now, I'm not saying I'm bullish.
Previous support turned resistance. Nice one.
In that one there. I mean, I'm not saying I'm bullish overall, because I still think that there'll be a load of selling going on here, and I think we will actually head back towards the lows again. But I think there's a bit of scope for a rip your face off rally in stocks that, you know, you'll get all the new money flooding here thinking that they're missing out. And they'll all be suckered in here. And then you'll just have all the institutions and, you know, the professionals selling it up here with all this flood of new liquidity, this new money that comes in before it heads lower.
Yeah.
Would be my sort of map for that. So that's the DAX. FTSE, Not as clear on the technicals from a pattern perspective, but I do think there's a bit of a bottom going on here, potentially a triple bottom formed there with the breakout above there, consolidating around here, pullback, tested the support and held. Again, potential for a rally higher. This is, I'm targeting 6235 on the FTSE, which is 50% of this entire down move.
And obviously the FTSE's pretty affected by the dollar as well, dollar strength, isn't it?
Yeah,
So,
and oil as well.
Yeah.
So maybe why it's been suppressed a little bit, because it's got BP and Royal Dutch Shell, which are massive players in the FTSE 100 from a weighting perspective.
Never heard of them.
Nah. That's a massive move, actually. My colleagues, a couple of my pals are talking about BP. I think I haven't really been following the price action, but it's up 3.5% today, gapped higher.
Yeah.
Potential, is that some sort of bottom, maybe? I don't know.
Yeah, I mean, you could say that looks like squint a little bit, a lot of reverse head and shoulders.
Could be a gap fill up to there, maybe 395 on BP.
Yeah, I mean that would be the same for the oil price as well. I suspect it's probably that move happened when the oil gapped from $40 odd to $35.
Yeah,
on the WTI.
So Nasdaq potential inverse head and shoulders that sloping higher. They tend to be more powerful if they play out. Whether or not that will happen or not, I don't know. Again, we're getting actually quite close to 50% rally in the Nasdaq, and above that we're looking at sort of 8550 as a 61.8% rally. So on the flip side of what Steve said, I think there is potential maybe for a bit more upside in stocks. So I'm going to take the other side of that trade today. I'm going to buy DAX at 10,062. I'm going to place a stop below that 4-hour candle, which is a 300 tick stop. So not particularly great from that perspective, but I'm going to target that 61.8 level or just shy of it at 50. Let's go 75. So still 5R, but I mean, that's obviously going to take a massive move, a 1,500 point move today to get it up there. But I guess I can keep it quite open-ended and see how that looks at 9 o'clock tonight.
Yeah. Okay, mate.
Good luck.
Well, can I change my call?
If you like.
Nah, joking.
I'm using Joe's baskets.
I'm doing a bit of a webinar on the old baskets today, talking about those.
Oh, yeah. Oh, nice one. I'll tell you what I do see that works quite well on them is, I know you don't want loads of lines on your charts, but previous highs and lows. So this was like a monthly.
Did you draw those on, or have you got something?
No, I've drawn them on. So these are sort of previous highs and lows, and this was previous support. So this is euro dollar, and this was one of the reasons why I looked at euro sterling long yesterday, even though it's gone overnight. It did dip under this support yesterday. So that's euro dollar support. And if we go to New Zealand dollar, that's New Zealand dollar resistance. So hey presto, I'm looking at euro New Zealand today. We've also had these bullish outside. Yeah, we've had these looking
at the same thing.
Had these bullish outside candles posted on 45 minutes, 60 minutes, and potentially on the 3-hour chart. And I like this from a pattern formation. We've also got a 13 count on the daily chart, D mark, which normally indicates the end of a trend. We've got support here, which is actually clipped this morning at 182.60, and the eventual target level is up there. So I'm going to go for a ridiculous R. I'm obviously not going to get it today, but
never say never, mate.
Never say never.
You've got to be in it to win it.
Yeah.
So
one in 50 of these might pay off, and it'll be absolutely enormous.
183.44, stop below the low, which is 182.45. 82.45 and 195.50.
12R.
Yeah, you need 1 in 12 paying off, really.
So that's the bad boy today. 183.44, 182.45 stop, 195.50 target. Using correlation, using loads of different bits and bobs.
And using Steve O'Hare's method of RR.
Yeah, RR. Of madness.
Bunch of pirates, all that are. Okay, so as we touched upon China's PMI data was the big news overnight from a macro perspective, posting at 52.9, which puts them back into the expansion territory for March. I don't think anybody saw that coming, given what's happened with regards to the slowdown caused by coronavirus. We saw sterling quite resilient yesterday. Not too sure as to why. Anybody see anything there
What was that, Joe?
on
Sorry.
sterling as to why it was sort of outperforming yesterday?
No.
No.
If you look at your correlation charts on sterling, Ian, I was fancying that as a short, actually, thinking that it's
Yeah, I think
probably a
sterling's topped
bit
out. That's why I fancied
overdone.
that. Fancied euro sterling. I've done this. I do this in the morning. I don't know if you can see that. Can you see
No, you
that?
have to put it in front of you.
In
Hold
front
it
of
up
your
on your
face.
chest like that.
No, that. There you go. So that's like a
Right.
lot of sheets, but it gives
What are those
basically
sheets?
it's a bias on not just currency pairs, but currencies as an individual. So what I look for is that basket and whether or not the euro's bullish, sterling's bearish, etc., etc., etc. And then I go through to all my crosses and highlight whether or not they're bullish or bearish, and then try and match them up. Basically.
Yes, exactly what I do. It sort of stops you getting in a pickle with having conflicting
side.
views.
Yeah. And a lot
So
of them are neutral as well. So the neutral pairs you just leave alone.
I tagged them all on the baskets here. So I've got dollar is strong, euros strong, sterling weak,
Yeah.
Swiss franc weak, Aussie dollar weak, CAD weak, New Zealand dollar weak, and yen strong. So I just pair them all up, and that's how I sort of get my markets to trade for the week. What I've got on the screen now is the sterling basket, which I was just referring to a minute ago. So it's had this strong rally from the lows, approaching some key fib levels and some clusters of previous resistance. So or previous support now turn resistance. So I think there is, as you say, a bit of scope for weakness on sterling pairs in the short term.
Yeah, I like that.
Data-wise today, we've got Eurozone inflation at 10 o'clock. We've got Chicago PMI at 245, and we've got US consumer confidence at 3 p.m. Not sure the data, again, is still having too much of an effect on things. But we shall see.
Mm-hmm.
Anything else, anyone?
No, nothing else. I've got nothing else.
Cool. So webinars today.
I'm doing a Ichimoku Cloud.
Ichimoku Cloud.
Trading the cloud. Just talking through what the components of the cloud are today. If anyone wants to join me at 10:30.
And I'm not doing one.
No,
you're not doing one. I'll do one for you. I missed out on one yesterday.
One.
Oh, yeah, okay, lovely.
I'll rattle one out.
Cool. I'm doing talking about what we just spoken about in the baskets and how to sort of set up for that.
I could do DMARC.
Conflicting trades. Yeah.
DMARC, I think.
Have you got his permission?
Call it
you
something else.
You don't need it for DMARC,
Denmark.
do you? I think you only need it for Bollinger.
Oh, don't say that.
I don't even think you can say the word, can you?
Yeah.
You're talking about the champagne, aren't you?
Oh, of course. Yes.
We can call it something different, like a code word.
Bolly bands.
Or can't we call him Ben Bollinger? Or something
We can call it Bolokov. That Russian indicator, Bolokov.
Yeah.
Wink, just like Bolokov wink, and just like everyone will know what we're talking about.
Yeah, lovely. All right, guys. Well, let's wrap it up there. We'll catch you at the webinars if you're joining us, and if not, we'll see you in the morning.
Cheers.
Have a good one.